We're going to now be next talking to a company which has been benefiting from gold loans. Its assets under management, in fact, increased 8% sequentially when you look at it quarter on quarter. Yes, I am talking about Manappuram Finance, and VP Nandakumar, the MD and CEO, is joining us live here on the channel. Good morning, Mr. Nandakumar. So, like I said, your gold loan assets under management have increased 8% sequentially, whereas the profit after tax and NIIs did take a hit. How should the viewers of ET Now, your shareholders, the analyst community, put all of this together?
Yes. During this time, during the pandemic, there was a shift in the profile of the customers. The customers are drawing lesser amount, small tickets. The demand from that class profile was less. So we had to target higher ticket loans because there also we have seen some competition. So in spite of a growth of around 23% from the first quarter, we were not able to show that to the profit because of the competition we had in higher tickets, and small tickets their demand was less. So this our yield has come down to around 28.5% because of that. That's the reason. And also our microfinance company, it will take 1 or 2 quarters more to come out of this pandemic situation. Other businesses also, but in spite of that, we could grow gold loan. And the growth of the consolidated AUM has grown by around 10%. It is primarily led by gold. So I expect the things to improve in the coming quarters.
Right. But so what really changed? I mean, what happened, that suddenly, you start to see such sort of issues as far as gold loan is concerned? Or it's just, that matter of 1-2 months where, just you saw that, little bit of issues came in and now gold prices have started to go up again?
Yes, so these are all good for gold loan companies. Gold prices moving up is good for gold loan companies. So we have grown. Our growth is compared to the market. Our growth is good. Yes, this whole of the year itself, we have grown by nearly 7%. So growth has been already achieved. So, but we have this first quarter we had a dip. From that, we have grown 23%. In spite of this, there was some yield pressure, primarily because the demand from the small ticket was less. This was the area where we used to get a higher yield. That's the one reason for the yield depression. But that demand is increasing. The economy is back on wheels, particularly in rural and semi-urban economy, etc. And the gold price is increasing. These are all good signs for the company's better performance in the coming quarters.
Okay.
Right. Just in terms of cost of funding, which is going up largely because of rates in the system going up, how well is the company prepared for that?
That may not be a problem because, the one challenge is, yes, there is surplus liquidity available in the system. So, if the cost of funds goes up, this can be passed on to the customers. If there is an increase by 0.5% or 1%, it can be passed on to the customer.
Okay. Now, the fact is, Mr. Nandakumar, if you can throw light on all of this, you've talked about cost of funds, which, in all probability will go up just the way the interest rate cycle is supposed to go up. You have made a telling point also that gold prices going up augurs well for your business. But at the same time, you're also hearing of degrowth which is taking place in the hinterland. How should someone zoom out and look at all of this?
We see growth. So in the coming quarters, the yield depression, whatever we had, the margin depression, this will be compensated with growth. We are able to grow. We are growing at a steady pace of 1.5 to 2% every month as time goes on. Even in the other subsidiaries also, the collections have improved. Collections have touched around 900% in microfinance, including IDF collection yearly. And also in other commercial vehicles, etc., including areas, the collections are around 110%, etc. So the things are back to normal, and dispersals also have started. So from the non-gold portfolio, our profit was almost negligible. That is the reason for a lower profitability, lower yield, lower ROE, etc. So all these are looking positive because of the situational change.
Okay, Mr. Nandakumar, that's all the time we have for today. Many thanks for joining us live today to analyze not the quarter that's gone by, but of course the road ahead when we're going to see maybe cost of funds going up and even gold prices which are breaking out. I tell you